Administrator, am I good to go? Am I live? Yeah, okay, brilliant. Hi guys, can you all hear me? This is Zahir Anwari from the Traders Cosmos. Thank you all. Hi Sandy. Hi FX Boyke, uh, MRCC. I don't know. You've all got some amazing names. I just I can't seem to pronounce them all. But thank you all very much for joining today's webinar. Thank you for taking time out. My name is Zahir Anwari from the Traders Cosmos. So as some of you guys know, I know there's a few regular sort of visitors to my presentations. I'm very much a long-term trader. Okay, so I'm looking for long-term opportunities, and I will reflect how I go about looking for these opportunities in the presentation. Now, as you can see in front of me, what I'll do is I'll go through my regular procedure with my presentation. So I'll go through my chart setups. I'll go through how some of the handful of indicators that I use, the screens and the charts that I use. And then from there, we'll then go on to do some analysis of the summer period, and we'll see how price action has been acting over the last sort of month and how that has affected how me as a trend trader has the stance and the action that I've taken. Now, remember, I am a trend trader, so my application of my style of trading will be very different to, say, a day trader. Okay, so if you are day trading, you'll probably see something that's a little bit different. Okay, so let's get into this. So the chart I have in front of me is the cable, so the pound dollar, and on the left hand side you can see my watch list. So you can see it's quite an extensive watch list. So it starts all the way from the Aussie dollar at the top, all the way down through to the South African rand, Japanese yen at the bottom. Okay, so I do have an extensive watch list. I think that's really, really important. A lot of traders tend to limit themselves to maybe even a single currency. Like I've seen titles such as a euro expert or a gold expert, or people limit themselves to the majors, and people even limit themselves to a single market such as foreign exchange. I trade all the markets, so foreign exchange, stocks, basically whatever's trending. And through this presentation, you'll understand why. Okay, so on the left hand side, you can see my watch list. At the top, I have the weekly time frame, and at the bottom, I have the daily time frame. Oh, guys, I forgot to mention, if you have any questions and they feel that and I feel they're relevant for that particular moment, I'll answer them. If I do miss out on any questions, I can't see them coming through, I'll just answer them at the end of the presentation itself. Okay. So weekly at the top, daily at the bottom. Now, how do I use this? Well, basically, I use the weekly to determine trend direction. So is the market up, down, or in an area of consolidation? The daily time frame, I look at price action at a sort of closer detail. But then I also use the daily to enter, and most importantly, where I manage my stops. Okay, so the daily I use to enter and also manage my stops. Now, when I speak to a lot of traders, they find themselves getting stopped out quite quickly. And the reason for that is because maybe they are doing their analysis on their weekly and the daily, maybe even the monthly, but a lot of them are then managing their stops on a lower time frame, maybe the 4 hour, maybe the 1 hour, and that's where they're getting stopped out too quickly. The reason for that is because there's a lot more noise, and so their stops are getting hit before price moves in their favor. So stop management for me is done on the daily time frame. Okay, let's start with the weekly chart. Now, as you can see, it's just basically a naked chart. What I like to use the weekly chart for, as I said, is trend direction. And so what I like to put on here are the major areas of support and resistance that I like to use. So the first indicator I'm going to load on is the weekly 200 moving average. Now, this is the simple moving average. You can use the exponential, it's all very personal. I just tend to keep it as the simple moving average. And what this acts as is a major area of support and resistance. So you can see where areas where price has come towards the 200 moving average. Now, if price is anywhere near the 200 moving average, I would usually wait for price to break through on either side before looking to enter the market. So if we take this big green bar here, we can see that it's actually broken through the weekly 200 moving average. If I got a buy signal just before the weekly 200 moving average, I would actually ignore that and then wait till price is broken and closed above before looking to buy. Now, of course, in hindsight, we can see it's just broken straight through, but at the time, the weekly 200 moving average would have acted as an area of resistance. So a little bit of patience, wait for price to break and close above, and then I would have continued buying. Okay, so the weekly 200 moving average acts as a major area of support and resistance. Now, the other indicators or the other support and resistance levels I'm going to load on are these pink lines. Now, these pink lines, if I just go back into the back end of my software, these pink lines represent the yearly, so you can see the interval, the yearly high, the yearly low, and the yearly close of previous years. Okay, so what I'm really looking at is a macro picture of price action. The highs and lows that price has bounced between over previous years. And to keep that even simpler, to make that even simpler, I only use the previous 2 years. So if we look here, you can see the high and the close, they're quite close to each other. So we've got the high and the close, and we've got the low of 2013. We've got the high, the close, and the low of 2012, 11, 10, and so on. I'm only going to use the pink lines of 2013 and 2012. Okay, so that is how I use the weekly 200 moving average. The pink lines are areas of support and resistance, which are the highs, lows, and close of previous years, the weekly 200 moving average, and also round numbers. So what we can see here, of course, is the pound dollar was around the figure 1.70. We had a break above, and it has since reversed and has headed back down again. Okay, so the 1.7 is a round number. Now, for me, round numbers happen every 1,000 pips. So on this scale, I'm looking at 1.7, then 1.6, 1.5, etc. If price reverses and headed back up, then I'm looking at 1.8, 1.9, and 2. So I'm looking at price quite a large area. So I'm looking for 1,000 pips between round numbers. So if I was to paint that as a picture in your mind, so you guys can sort of understand what I'm looking at, is imagine if price is underneath the floor of your room. Okay, and the floor is around number 1.7. So what is currently acting as is an area of resistance. Price is underneath the floor, is acting as resistance. When price breaks through, resistance becomes support. Now, where is price going to head towards? Well, price is going to head towards the ceiling of your room. That's the next round number, so 1.8. What we need to be aware of is that between 1.7, which is the floor, and 1.8, which is the ceiling in your room, we want to make sure that there is no other area of support and resistance between the floor and the ceiling. So no pink line, no weekly 200 moving average, no daily 200 moving average. Okay, so I'm really looking for large areas for price to move. Does that make sense, guys? If you guys can just give me a quick yes or no in the message. Yeah, thank you, Pan. Pan on fire, like the name. Okay, brilliant. Thank you. Thanks, FX Boyki. Brilliant. Okay, right. Thank you, Marianne. Thank you. Great. Okay, brilliant. Right, now let's go down to the daily time frame. Again, daily time frame, what you can see here is just a naked chart, nothing on here. Oh, let me just bring back data. Right, so completely naked, okay? So the first indicator that I'm going to load on is the daily 200 moving average. Now, the daily 200 moving average also acts as a major area of support and resistance. All right, so again, if I get a buy signal below the daily 200 moving average, I'm not going to wait. I'm not going to take that buy signal until price breaks above, and vice versa. Okay, so the daily 200 moving average acts as an area of support and resistance. However, there is also a fundamental difference between the weekly and the daily 200 moving average. I use the daily 200 moving average to give me a bias in price action. So what the daily 200 moving average does is it splits the market. When price is above, it's what I call a bull market. And when price is below, it's what I call a bear market. So I'm looking to buy above the daily 200 moving average, and I'm looking to sell below the daily 200 moving average. I don't do the opposite. So I don't trend opposite to that. So I wouldn't start shorting here. So we can see that price is actually heading down. We are above the daily 200 moving average. And so this is a bull market, but we can see that price since July has really been in a sort of bear trend, a downtrend. But for me, until price breaks below the daily 200 moving average, I'm not going to be shorting this. Okay, so this is again where my stance as a trader is very different to that of a day trader. I'm not looking to rush into a potential trade. I'm waiting for the best opportunities. And there's a reason why, okay? Because I do use the power of compounding to accelerate profits once I'm in a trend. Okay, so even though price is heading down and day traders have probably profited quite nicely from this, until price actually breaks through the daily 200 moving average, I'm going to be standing aside. Now, this is not something new. This is not something that I've created. This philosophy actually goes back to the turtle traders, Richard Dennis. This was, the 1970s, the 1980s. This is a philosophy that's still very much used today by long-term trend traders. So this is not something new. We don't need to reinvent the wheel. All I've done is taken a philosophy that works, and this is a philosophy that's been given to me by my mentors, and I've just simply put it into action. So I've never had to really create my own strategies. I just take what's worked and put it into practice. Okay. Now, what I want to do is concentrate purely on price action today. Okay. So I don't really clutter my charts with any other indicators, but you can, if you want, start using subchart indicators to give you further confirmation of trend direction. Now, the way most people use Get Stochastic is using it for overbought and oversold. So when stochastic is overbought, that's an opportunity to sell, and when stochastic is oversold, it's an opportunity to buy. However, as I'm a trend trader, I don't look to counter trend. What I'm looking for is for price to go in a particular direction and to stay in that direction. So what I use is something like Get Stochastic, which produces this false bar reading. See these black lines that it's producing? Basically, what Get Stochastic is saying is that if stochastic is overbought in this case, ignore it. Don't start selling. Ignore that it's overbought and continue in the direction of the bull trend. Okay, so my Get Stochastic works slightly different, where it does give me a false bar reading telling me to ignore stochastic. Remember the expression, the trend is your friend, and that is the direction we really want to be going in. Okay, so I hope that gives you an idea, guys, of how I break down my charts. Okay, very, very simple. A few areas of support and resistance, round numbers, weekly and daily 200 moving average to give me a bias in price action. Okay, now let's start with the weekly. If we actually take price action from this low, so we're actually going back to July of 2013. So we're going back a whole year now. And you can see from this low, which is just under 1.5. So we've got round number 1.50. Okay, we can see we had this double bottom formation, and we can then have this bounce to the upside. And we can see that price actually moved in a very linear trend and very natural to price. It never moves in a straight line. What we've had is breather area. So a move, breather, move, breather, move, breather, move. And so what we're currently going through for me is nothing more than a breather area. Okay, this is not a trend reversal. This is not a change in trend direction as yet. It's still very much a breather or a pullback in a bull trend. And you can see that the actual length of the pullback is no different to a couple of other pullbacks that we've had in the past. So until this actually starts weakening further, I'm not actually going to be looking to short this just yet. For me, this is just a pullback. Now, we know that the summer periods are usually void of trend direction. And this is a good example of that. The trend is very much up. This is simply a pullback in a bull trend for now. Now, how would I look to trade this? Well, very clearly, what I'm looking for now is price potentially to reverse. It is at an area of support, and we've got a support level here. And we've also got support levels here, which are the high and the close of last year. So what I'm looking for is these support levels to hold strong, and for price to reverse back to the upside, break through figure 1.7 and break above this pivot. When price breaks above this pivot high, this when I'll be looking to enter long into the market. Now, if I actually compress price action, we can see that price in the past has reached highs of 2 and 2.1. Now, this is not guaranteed, of course, but future price action lies in the past. Okay, that's a very, very important point. Future price action lies in the past. So what that means is that if price does break above 1.7 and does break above this pivot high, then we should see price reach highs of 1.8, 1.92, and ideally a breakthrough 2 and then 2.1. Now, this is purely from a technical perspective. When I trade foreign exchange, I don't take fundamentals into consideration. So this is purely from a technical perspective. The trend is your friend. So once I'm in a trend, that is the direction that I want to be going in. And you can see that why standing aside while price is actually figuring out a clear trend direction is actually beneficial, because once I am in a trend, I then have, potentially 3,000 or 4,000 pips to target. And the way I trade, which is scaling in, I can make an area of 2,000-3,000 pips leveraged to much larger. So a little bit of patience can reward a trend trader very, very heavily. Okay, so that's what I'm looking for on the pound dollar. I'm looking for price to break above this pivot high and then looking to go long. Now, how would I short this? Well, if price breaks below the daily 200 moving average, and if price breaks through these pink lines, that's when I'll start looking for shorting opportunities. Okay, so when price breaks through these pink lines, these will then become resistance levels. We can see the daily 200 moving average is very close to where the pink lines are sitting. So this whole area is actually a cluster support. When it becomes resistance, i.e. when price breaks below, retest, next breakout, that's when I'll start looking to short this. Get stochastic will then also start giving me a black line at the bottom here. Sorry, let me just open this up. Get stochastic will also start giving me a black line, so a false bar reading, telling me to continue short and ignore the fact that stochastic is oversold. So pound dollar, standing aside until we get a clear trend direction. I hope this is making sense. Now, let's go to the pound Canadian dollar. So the pound Canadian dollar is something that I have traded. And I made good profit on. This has gone, okay, we've gone green again. Yeah, eSignal. eSignal is the software that I use. Okay, yeah, okay, we're coming through. They were having technical issues this morning, guys, so please bear with me. Okay, so we've got the weekly coming up. So let's start with the weekly, okay? And then hopefully the daily will catch up in due course. Okay, pound Canadian dollar, very good example. Okay, I can see some questions coming through. Let me see. FX Boyke, and if support resistance in between major support and resistance. FX Boyke, can you be a little bit clearer on that question, please? I'm not quite sure what you're trying to ask. Okay, so let's have a look at the pound Canadian dollar. Now I'm just going to compress the pound Canadian dollar. And you can see that price from this high, which is going back to 2007, was very much in a downtrend all the way through to 2010. Now, after every trend, price goes through an area of consolidation. Now, what we're looking for is price to break out of this area of consolidation. Now, we don't know whether it's going to break up to the upside or the downside, but we can start weighting things in our favor. And how can we do that? Well, we start using the 200 moving averages. So you can see that at this point here, the weekly 200 moving average became an area of support, and then price eventually broke out of this high and started trending. And it broke out around 1.65 and reached a high of 1.85 before going through this current area of consolidation. After every trend, we go through an area of consolidation. So now how would I trade this? Well, being the summer months, we can see that price is very much void of any trend direction. You can see the last few weeks have just been producing these indecision candles, but this whole area is an area of consolidation. As we are above the weekly 200 moving average, my bias is with price to continue and create new highs. So what I'm looking for is a breakout to the upside. Now, of course, it's not guaranteed, but I've got the odds in my favor. If we go down to the daily time frame, which has now loaded up, we can see that we are also above. So we had this breakout around 1.65, 1.64, 1.65. Price trended very nicely and has since gone through this area of consolidation. We are above the daily 200 moving average. Remember, I used the daily 200 moving average to give me a bias in price action. So as I'm above the daily 200 moving average, my stance is to favor the bulls. So I'm above the weekly and I'm above the daily 200 moving average. So the odds are very much with the bulls. However, price comes first. So until I actually get that breakout and confirmation that we are in a trend, I'm going to be standing aside. And you can see that June, July, August has been void of any trend direction and has really been a continuation of, well, the pound Canadian dollar is a very good example of the foreign exchange market in general for 2014. I've been trading since 2007 and I've not seen anything like this in the foreign exchange market, in the sense that the market has been totally void of any trend direction. Yeah, it's been totally void of any trend direction. So it's been difficult. It's been difficult this year trying to make money from foreign exchange. So that's why limiting yourself to foreign exchange is not the best thing to do. If you look at the stock market, particularly some of the US stocks, they've been handing out very, very good money. So while the foreign exchange market is void of any trends, you protect your money from trading in foreign exchange. You leave the foreign exchange market and you start risking in trending markets. And that's why having an extensive portfolio is very, very important. So the pound Canadian dollar is actually a very good example of how there have been no trend directions in foreign exchange in 2014. And the summer months have just been a continuation of this. If I get my support and resistance levels, and I'll draw the high here and the low here, you can see that price is ranging between this high and between this low. Until price actually breaks above this high, I'm not looking to buy. So if price stays within this range, I'll be standing aside. A breakout above this high, and this will continue the bull trend, and this is when I'll look to enter. If it breaks below the daily 200 moving average and below this support level and below the figure 1.80, that's when I'll be looking to take some shorting opportunities. Now, there are traders out there who trade ranges, but for me, there's no, it's time consuming, it's stressful, and most importantly, I can't compound. And compounding is how I accelerate profits. So if you actually take this area here broke out around 1.64, 1.65, and it moved to around 1.85. So you're looking at about 2,000 pips. I actually made around 5,000 pips in this area because I had 3-4 positions running at strategic levels. And so if my initial stop loss, which is about 300 pips, say for example, and I'm risking 2%, you can see how by letting that position run and compounding into that position can leverage your profits. Okay, so it's really about trending markets and not ranging markets. So just to summarize, we're above the weekly 200 moving average, we're above the daily 200 moving average, but we're stuck in a range. The odds are with the bulls because we're above the daily 200 moving average. So what we're looking for is a breakout to the upside, ideally. If it breaks out to the upside, we'll continue to buy. If it breaks below the support level and the daily 200 moving average, that's when we'll be looking to short this. Okay, let's have a look at the euro now. The euro Aussie dollar. Yeah, perfect. Okay, look, it's not taking a lot of time to load up, which is great. Okay, euro Aussie dollar. What do we have? Well, we had a head and shoulders formation at these pink lines. So these are the pink lines. It's the high and the close of 2013. We had a head and shoulders formation and the area 1.6 acting as an area of resistance. And we can see then that price since then has been in this downtrend. Now, this is one of the currencies that I have traded this year and taken a bit of profit. Okay, if we look at it, with price broke through 1.5 and is headed down. And ideally, what we'd like to see is price head towards 1.4 and towards the weekly 200 moving average. So we've still got a fair distance for price to move before we find any area of major support. If we go to the daily time frame, now you can see that when price broke below the daily 200 moving average, this is when I started looking to enter this market. And I'm not a very aggressive trader. I'm quite conservative on initial breaks. So what I mean by that is some traders may go short on this initial break of the daily 200 moving average. I tend to wait for the next breakout. So when price broke through, natural market movement usually dictates a retest, and it did retest. It broke above. The reason why it broke above is because it came back to retest the figure 1.50. So we had a break, a retest, and then the next breakout. Now, this is when I first entered the market. Now, it's really important to have wide stop losses in trading. My stop losses can be anywhere from 300 to 600 pips, because it's very common for price to go against you before going in your favor. Most traders really expect price to just shoot in their favor. And that's where a sort of lack of understanding of natural market movement makes trading an emotional practice. Okay, patience is key. Patience is a critical part of trading. I can't stress that enough. Patience is a critical trait that all traders must have if they are to be successful at trading. What most people want to do is make money very quickly in trading. And this in part is due to the way the market, the foreign exchange market is advertised, particularly by brokers. Okay, they think that, they say because of the leverage that is offered in foreign exchange that you can make a lot of money very quickly. Now that is true. You can. If you're in the right market conditions and everything's going in your favor and you're just gambling and you're lucky, then fine, you can make money very, very quickly. But as soon as market conditions change, you can lose that money even quicker. And I've seen it happen. So patience is a very, very crucial part of trading. And so you can see here's a good example. I got triggered in around this level. My stop loss was up here somewhere. So above 1.5, allowed for the pullback. And then we've had the run down, an area of consolidation, next move down, and now price, just being the summer months, is doing nothing. What we're looking for is this trend to continue, this bear trend to continue. And how I'm going to do that? Well, you probably already guessed it. Until I get a break of this pivot low, I'm not going to start adding any more positions. I have got positions running on here. So until I get a break of this pivot low, I'm not going to start adding any more positions. So I'm standing aside until we get a clear trend direction. Stochastic was siding with the bears, but you can see now how it's gone into an overbought area. Now, this is good. Overbought in a downtrend is good. Overbought in an uptrend is not good. And overbought in a downtrend is good, because what that means is a reversal and a continuation of the trend. Most traders use stochastic and these overbought, oversold indicators the opposite way around. What you want to see is overbought in the downtrend and oversold in an uptrend to show continuation of the trend. Okay, so Euro Aussie dollar very much on my watch list, but being summer, being void of any trend directions, until we get a break of this pivot, you want to be standing aside. Okay, let's have a look at the Euro Pound. All right, so Euro Pound, again, currency, one of the currencies that I have traded, and you can see that the Euro Pound, again, we go back to what we're looking at, July of last year. Yeah, July of last year. You can see July of last year, it's been in a downtrend. It had a double top formation, or a 1-2-3 top formation around 0.88, where we had the high of 2014. And you can see that since then, price has really been in this downtrend. It's broken through the weekly 200 moving average. It's broken through these support levels of last year, which are now resistance levels. It broke through the figure 0.8. Now, this is a very good example of a break, a pullback to retest. And we've seen further weakness this week. So 0.8 is a round number. It's acting as an area of resistance. What we want to see is price break this pivot and create further lows. So until we get a break of this pivot low, we want to be standing aside. Now, remember, this is an approach of a trend trader. Day traders will have different approaches. This is how trend traders trade. Okay, and a break of this pivot low, and we should see further weakness. Now, if we go down to the daily time frame, we can see in closer detail what is happening. Okay, we are below the daily 200 moving average. So this is giving us a bear. This is telling us that price is in a bear market. So we want to be favoring shorting opportunities over buying opportunities. And you can see this is the area where we started entering. All right, so price did hand out some profits. So until we get a break of this pivot low, we want to be standing aside. Now, if I go to the weekly time frame, the next support level is this pink line low of 2013. Okay, so this is the pink line low of 2012. Excuse me, this is the pink line low of 2012. So what we're looking for is price to head towards the pink line low of 2012. And if I compress price data, ideally break through and then head towards 0.7. Yeah, I will do, Sharon. Yeah, I'll come to those next. 0.7. Okay, so we're looking at a good 1,000 pips between 0.8 and 0.7 if price breaks through this pink line. Okay, if price breaks through this pink line. So remember that example of what I was saying, the ceiling and the floor. So we've reversed it now. Price has broken through the ceiling, which is 0.8. And it now wants to head to the floor, which is 0.7. And I think FX Boyki, this is answering your question. So the pink line is an area of support between 0.8 and 0.7. Okay, I can see some questions. Okay, guys, can you see my charts? Yeah, okay. Okay, good. Okay, so was that a clear explanation? You got to understand how I'm trading the euro pound. Yeah, 0.78 acting as my first support level, a breakthrough here, and then I want to target 0.7, a breakthrough here, and then 0.6. So once price breaks through this pink line, I will then be using the round numbers as target levels. The pink lines beyond that are too old because I only use the previous 2 years as support and resistance levels. Okay, I've got a couple of requests to go through the euro dollar. Okay, now let me explain to you about the euro dollar. I have not traded the euro dollar since, let me tell you where I last traded the euro dollar. The last time I traded the euro dollar was at this trend here. So I'm going back to the beginning of, well, beginning of 2013. So January 2013 was the last time I traded the euro dollar. The euro dollar has been void of any trends. Now, there have been small trends, but nothing that's going to change your life. These trends aren't clear. It's very choppy and it's very unclear. There's not a clear trend direction. However, let us see what's happening. And we could be seeing a potential setup with the way price is looking at the moment. Okay, so if we start with the weekly, we can see that price was above the weekly 200 moving average. It found an area of resistance at the pink line high of 2014, which was also the round number 1.40. And you can see that price has been weakening. It is now trading below the weekly 200 moving average. So we started to see weakness. However, where is price likely to head towards? Well, we've got this pink line close, which is a support level from 2013. Okay. And we've also got this pink line low. Sorry, that's 2012. And we've got a pink line low of 2013. In between that, we've got the round number 1.30. So what I would like to see is price head towards 1.3. So this level here, break through, head towards 1.3, break through, and then head towards the pink line. Once it breaks through this pink line, we will then start targeting round numbers. And you can see that we then have the next pink line low at the round number 1.2. So what I would like to see is price head all the way down to 1.2 if it breaks through these support levels. If we go to the daily time frame, we can see that price is now also below the daily 200 moving average, suggesting a bearish bias. So things are looking very interesting here. the euro dollar potentially could be a shorting opportunity. And the way it's actually been trending is actually quite neat. Yeah, okay. So John Savage is asking, when do I take the trade? Well, what we have is this pivot level here. So if we look at price action, we've actually got a pivot level here, and we've got this support level here. So you've got about 150 pips between here and here. So if you want to trade this, what you're looking for is a break and a close below this level. Okay, a close is very, very important. You don't want a break and then a reversal. Okay, so you want a break and a close. So what that means is waiting until the end of the day to confirm that price has closed below this pivot level. When you get a break and a close below this pivot level, this is your opportunity to enter the market. Yeah, you can do it on a daily chart. I always enter on a daily chart. Now I have a tool. So for example, I'm just gonna do this quite. Yeah, yes, that is correct. Okay, here we go. Now I have a tool, and I'm just going to use a random bar as an example. So I can click on the low, the high, and then the low again. And so what this does, it gives me an entry, it gives me a stop, and it gives me a target. Okay, so it's a very mechanical approach. So when you get a bar and that bar has closed below the pivot level, you can create yourself a tool which can then mechanically create an entry, a target and a stop. Okay, and I've created this using the fib extension. Now, this is not what I particularly use. I have my own proprietary tools that give me an entry, a stop, and a target, which have been programmed into eSignal. But if you don't have tools like that to your availability, then you can create it using the fib extension. So if you guys want to know how to create this tool, then get in touch with me and I'll give you the settings for it. Okay, so what we're looking for is a bar to break and close below this pivot, and that'll be your entry point. We can also see that Get Stochastic is giving us this false bar reading. So what that's telling us is to continue short. Ignore the fact that Stochastic is oversold, continue short. Okay, let's go to the Aussie dollar. Okay, this is going to be the last chart, and then I'll go through some of the questions because I believe I've got about 5-6 minutes left. Okay, so if we look at the Aussie dollar, we are below the weekly 200 moving average. We've got price going through an area of correction. So what we need now is price to give us a clear trend direction. We need a breakout either to the upside or a breakout to the downside. If we get a breakout to the upside, we need to be careful of this pink line here, as this will act as an area of resistance. If we get a break of this, then we should see price head towards the weekly 200 moving average. So we just need to be a little bit careful of areas of support and resistance. If price breaks to the downside, then what we would like to see is price head towards 0.9 and then break through these support levels and beyond this pivot level and then further weakness. Okay, so if we do get a break below here, this will be an opportunity to get in short. We just need to make sure that we eliminate any risk. We can hit our target before these support levels. If we go to the daily time frame, we can see that price is actually above the daily 200 moving average. So what is that saying? Well, that's telling us that price has a bullish bias to it. So if price breaks below the daily 200 moving average, that will then give us a bearish bias. But what you can see is that price is very much in this area of consolidation. And again, that's because it is the summer months and price has just been going sideways. What we're looking for is a clear trend direction. Now, for me, the Aussie dollar is not one of the better trade. It's not a currency that I'm immediately looking to trade. There are too many resistance and support levels on either side. So until price actually breaks out of these areas, that's when I'm looking to trade it. So when price breaks below the figure 0.9, that will be an indication that we're looking for further weakness. If price breaks above this pivot high and above this pivot, which is the high of 2013, then I'll start looking for buying opportunities. So I'm looking for much larger areas for price to trend in. 200 pips, 100, 200 pips doesn't really do much for me. because I'm looking for large areas and then compounding to accelerate my profits. Okay. Let me go through some of the questions. End of day is GMT. Well, usually end of day in the UK is around 10 p.m. BST, British Summer Time. On a daily chart, yep, guys, remember, I always enter on the daily chart and manage my stops on the daily chart. Today's a perfect example of how I do my analysis. I just, for me, going down to 4 hour, 1 hour, there's just no, yeah, that's correct, John. There's just no, what's the word I'm looking for? There's just too much noise for starters, and it requires too much time. It requires management. It's stressful. I don't like to go below the daily 200 moving average, the daily time frame. I do not like to trade below the daily time frame. And that's just my personal stance. I know there's traders out there who enter on the 4 hour, enter on the 1 hour, and then manage their stops on a larger time frame. That's also possible, but I enter on the daily and manage my stops on the daily. Okay, yeah. Okay, that's a good question. The question, I don't know if you guys can see the questions. It says, could you comment on why you buy above the prior pivot and many traders thought to buy the dips? The expression is the trend is your friend. So that is the direction that I want to be going in. What most traders try to do is predict the end of a trend, or try to get the tops and the bottom perfect. So what traders are trying to do is getting right at the top and getting right at the bottom. I'm not interested in that philosophy. I'm not interested in tops and bottoms. What I'm interested in is the middle of the trend. So let me give you an example. The pound Canadian dollar is a good example. All right, so I'll just open that up. Now, if I actually compress the data, you can see that price was actually in this area of consolidation. And then we had a breakout to the upside. Now, if I started going short at all of these highs, I'd make a little bit of profit. But if I wasn't using a stop loss, then, I'd quickly see huge losses on my account. Now, the actual trend starts here. So this is where the uptrend starts, but I don't look to enter until price is actually broken out, which is around this area here. And then where price pulls back, this is actually an opportunity for me to compound. Now, this really comes with confidence and understanding price action. The trend is your friend, and that is the direction you want to go in. What most people are thinking is that, the best thing to do is to go counter trend and to get tops and bottoms. That's actually a very difficult way of trading. It's tiring. It's not, it's time consuming. It's stressful. It's better for price to correct and then open another trade. So let me just give you an example using my arrow tool. So if I have my first position running from here to here, and then at subsequent pullbacks or breakouts, this will then allow me to open up further positions. So instead of shorting it, I allow price to correct and open another position. Yeah, exactly. The trend is your friend until it bends. And that's exactly it. The problem that most people sort of face, and the challenge is, and this challenge usually comes under the psychology of trading. I'm very skeptical about the whole sort of industry around the psychology of trading. I don't think it's as difficult as it needs to be. What people need to understand is price action. So here is a good example where price is going against me. Now, of course, this is where I'm giving money back to the market. So I'm making profit and then I'm giving money back. But my understanding of price action is that I am happy to give back money because it will then give me an opportunity to open another position. And so I now have two positions running. So it's kind of like an arrow. When you pull back an arrow and then you let it go. So you pull back the arrow. As soon as you let it go, it fires forward. It's the same thing with a trend. You look at the pullback areas as if the arrow is being pulled back by the bow. then it fires forward, except when it fires forward, you're firing with a second position. Then you pull back the arrow again, you fire forward with a third position. So that's the way I trade trends. Instead of trying to pick tops and bottoms, go with the trend. Mate, does that answer your question? Okay, guys, I think we should call it an end here. Sorry, administrator, I know I've gone over by 4 minutes. If it's okay with you guys, I would like to refer you to a few ways of contacting me. My Twitter, please follow me. I'm very active on Twitter. So my Twitter handle is @Zahir Anwari. My website is thetraderscosmos.com. I also write for the Huffington Post. So I've got a lot of articles on here. My most recent article is Don't Give Up Your Day Job, which is basically all about how having a job when you first start learning to trade is very, very important. Okay, power of compound growth. Okay, so some very useful articles that I've got up on there for the Huffington Post. And I've also now been asked to be a regular contributor to FX Trader magazine. Okay, so my first article, Trend Trading and Art or Science, is actually live. It went live last month. So if you haven't read it, this will give you a very good understanding of trend trading and basically what I've gone through today, but in written format. Okay, thank you all very, very much. Thank you for all the thank yous, Pan, Ray, May. Thank you all very much. I hope you found that informative and it was clear. Sorry about the technical issues. And by all means, get in touch with me through my website if you have any questions. Thank you, Edith. You're very welcome. Have a great day, evening, afternoon, Manoj. Thank you. You're welcome. Take care. Goodbye.